For what on paper should have been a quiet week, 3-day working week here in London, it's actually been quite busy. We've had things going on certainly in the UK and the US, which I think are very meaningful, not just for how markets move this week, but certainly how they should lay out over the course of the next few weeks and months. Let's start closer to home with the UK. We had our first view of the first quarter trading of GDP in the UK. That number came in at 0.5% growth, and it's been widely commented upon that really just restores the economy back to where it was in effect September of last year. You may recall the last quarter of 2010, we certainly saw that the economy dipped back into a negative 0.5%, largely driven, they think, by the weather. So we saw a bounce back, and the disappointment, of course, was that the bounce back wasn't a big bounce back. It really just restored the position. But saying that, let's look here at some of the key metrics that do move on that data, particularly currencies, and I do continue to believe that currencies are almost a bigger story at the moment as to what's going on in the world. Sterling has certainly continued to hold on to what has been strong gains over the course of this current year. As you can see here, we started the year at around 155 against the dollar, and that's pushing up to about 165, 166 actually against the dollar at the moment. And so sterling is holding on to its value, but I do continue to believe that a lot of it is largely driven by US dollar weakness, and this is an interesting chart, I believe. It's basically the dollar versus a basket of other currencies, so it's not looking in isolation at a particular currency, it's looking at a basket of major currencies around the world. And just look at this decline since June of last year. It's one-way traffic for the dollar at the moment, and continuing to sort of build pace to the downside. And this, I think, will become more of a feature, dollar weakness, going forward. Now, what is driving that? This week we saw the first ever presentation by Bernanke, press presentation, and what he was in effect saying is that this accommodative policy that they've had in place in the US will remain for an extended period of time, and laid the groundwork for what I continue to believe a very supportive policy towards equity markets. And on the back of that, we did see equity markets both in the US and the UK nudge towards highs, and indeed the FTSE 100 had a brief look at 6,100 overnight. Hasn't managed to quite hold on to that, but nevertheless it is nudging towards the higher levels. Let's just concentrate on some of the news that we've had this week, and again reminding us that it has been meant to be a quiet week, but we've had some good numbers out to get our teeth into. The first was the big oil companies, BP and Shell. BP's results were, on the face of it, quite dull, and I think that's probably what they wanted. It's a year on now from the oil spill, and really what I think they wanted was a set of numbers that just broadly met expectations. There were no dramas involved. They did comment upon how much additional tax they're going to have to put aside now for the UK government. There's sort of $683 million put aside, with a continued $400 million going forward, and I think Shell have a similar number, so there's plenty of additional tax coming into the revenues which these big oil companies are providing for. But let's just take a look at this chart. This is the BP share price performance relative to Shell over the course of the last 12 months. And starting from a level of 0 here, you can see that BP down, as I say, around 24% relative to a sort of north of 30% increase in Shell's price over the course of that year. That relative performance difference between those two major oil companies, I think, is worthy of further investigation, because the reports that I've read this week from analysts suggest that BP's valuation at the moment is absurdly low, that it's taking the litigation potentially around the world at the worst case scenario. It's also suggesting they're going to lose a lot of value out of Russia in the negotiations. So my view is that BP at this level is operating at extreme levels of valuation, certainly relative to its peer group at the moment, and I think looks like a good entry point for that stock for a medium-term holder, not necessarily for the shorter-term holder. Another company whose share price disappointed this week in the UK was Barclays Bank. Those numbers coming through from Barclays, largely driven by the investment banking division over the last couple of years, saw weakness in that division. The core banking side actually saw good growth. They're not lending more money, but the money that they have out there, they're making better margins on, and they've certainly seemed to be generating more better performance. But it is the Barcap division that had a quieter period and probably came in slightly below expectations, and you can see there that the share price has shied away. I have been commenting over the last couple of weeks about some relative strength that was building in the banks, but unfortunately this number has taken a lot of that relative strength away. Another stock I do want to highlight as possibly worthy of further investigation at the moment is Smith and Nephew. You can see here that it's shied away from the 740 level that was achieved back in February, and it's now back down to near 650. So a big underperformer against the market. Much bid speculation, indeed confirmed bid interest around this level. It didn't materialise, and indeed we've heard this week that one of the big players in the market, Johnson & Johnson, has actually turned its attention and bought another company in the same sector, so clearly won't be buying Smith and Nephew at the moment. A lot of hot money coming out of Smith and Nephew. It is a great stock. It is doing okay in the market, and I suspect that's getting back into value territory. Now a lot of this hot takeover money is coming out of the stock. And finally, just want to comment on the mining sector. We spoke a couple of weeks ago about a lot of M&A coming in the mining space. Billiton indeed have made a move on a copper play, which is a big deal for them. Indeed, it is in competition with a Chinese buyer. There has been just a little bit of profit taking in the sector at the moment, but do continue to expect more M&A in the commodity space.